welcome to another episode of the K5 Trading. In this episode, we're going to explain to you what is FSB Trend Direction Establishment and how we can do the trend trading based on FSB. FSB stands for Failed Snapback, and that's the relationship between semaphores and bungees and the momentum of the market and the momentum on the momentum on the oscillators. So there are three type of the failed snapback: FSB blue, red, and green. And then basically we also look for the break of the structure for the confirmation of the trend direction. We use two time frame for the establishment of the trend and the trend trading. PTF is a trend setting time frame, and STF is the setup and trading time frame. So before we go any further, I will explain you a little bit very briefly about the bungee semaphores and what FSP is, and then we will go on the some of the example and the tool we use to identify those kind of trades. So first of all, what is bungees? The bungees are the bunch of the stochastics and RSI. They are calculated differently. They got slightly different ways to come to the conclusion of those lines and upper and reversal zone. And they also have their calculation is basically based on the Elliott wave and the Wyckoff wave cycles. There are five type of the bungees: black and white bungees. So black is on the white background and white is on the black background, and they call it a black bungee. And you can see here, this is our black bungees, this white color. Then we have a red and blue bungees. It's very obvious to see in this picture. This is a red bungee and this is a blue bungee. We have a green bungee right up here, you can see. And then we got a gold and yellow bungee, gold or yellow bungee, which is also obvious to see here. Now, the black and white bungees, uh, the degree is very small, and you can see they are goes up and down very clear, very rapidly. They don't stay in an upper or reversal zone for longer than 4 or 5 periods. So they are very briefly goes up and down, up and down, up and down. Now the momentum of the prices and the momentum of the bungees, they are not related. So sometimes you can see that the black bungee is coming from the upper reversal zone to the lower reversal zone, but the prices movement is very minute. So you need to remember that you can't simply trade based on the bungee's movement because of the relative move in the price is sometimes very minor. Then after comes the red and the red bungees. Red bungees, you can see here, it's right up here, the red bungee, and it's the same thing. It's higher, its degree is higher than the black bungee, and the same as like the blue is higher than the red, and then the green, and then the yellow. So the yellow is the highest degree of the bungee. Yellow bungee take a while to come from the upper one reversal zone to the another reversal zone. For example, in this case, you can see that the yellow bungee is right up here, and then it took that long to come into the lower reversal zone. But during that time, red bungee actually made two cycles. Green bungee also made one cycle, a little bit faster than the yellow. But the black bungee actually make one, two, three, four, five, six cycles altogether. So that's how the bungees actually work together. And when the all bungees are in the one reversal zone, they all coming back to the low another reversal zone, or a black bungee goes to the opposite direction and then come back and the price is failed to make a new high, we assume that the price is going to come down. This is called FSB. I'm going to tell you FSB in a bit. Okay, so bungee we use for the identification of the divergence. When you see the divergence identification, that's mean that's the price is going to come down. So you can see this is the divergence right up here in the red bungee, and the because red bungee is bigger than the black bungee, so the relative move coming to downside is also quite significant. Now, the bungee itself required a lot of understanding, lots of observations, and the movement of the divergence along with the movement of the higher value bungees. That will actually give you a very, very good indication that's how far the prices will move to the downside. The strength of the next move can be understood based on the divergence of the bungee. So if the red bungee's divergence we can see, then we can expect the move will be relatively smaller. But if we see a divergence on the green bungee or the yellow bungee, the move will be relatively bigger. The primary use of the bungee is to identify the trend reversal to confirm the new trend. That's where the FSBs comes in. And we will explain to you in a bit in the next couple of slides how the FSB actually works. Next is the semaphore. What are the semaphores? Semaphores are simply the swing highs and swing lows of the various degrees. Their calculation are based on the Elliott wave cycle. Semaphores, semaphores repaint to the right, and the relevant swing high shifted to the right if a pairing semaphore in the opposite direction is not formed. What does it mean by that? For example, we come down right up here and we got a red semaphore. If we don't have this pairing red semaphore is formed, then this red semaphore would have been shifted to the right as the prices move downside. But because the upper red semaphore painted or appear or form before this new move, so that's why we don't see appearing semaphore. Now the red semaphore is actually shifted right in this one direction. So that's how the semaphore is actually work. So they always work in pair. So we have formed this semaphore, and right after we form this semaphore, if this lower blue semaphore was not formed, then we would expect that this blue semaphore would shift to the right or something like that. The proper use of the semaphore is not for the trading, but to analyze trend, direction, and the strength. So that's how we use the semaphore. There are five types of the semaphore. Blue, which is the smallest degree, smallest value semaphore. Then we got red. Red is bigger than blue, and a blue is always behind the red semaphore. Yellow semaphore, which value is bigger than the red and the blue and the red, they are always behind a yellow semaphore. And then we got a noble, and noble actually got all those three semaphore behind the noble, and royal got all those semaphore behind the royal. So, for example, right up here we got this red semaphore. So behind this red semaphore, we also have a blue because they are nature in the fractal in nature, and also their values. They are the 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 way they actually calculated that you will always find a blue semaphore behind the red semaphore. Then you come to the noble semaphore, and behind this noble there is a yellow, red, and blue, and the royal, which got all of the semaphore behind that one. Now, after understanding the semaphore, before we start with the FSB trend direction, you need to understand the TTF and STF. So if we actually see a FSB red into the TTF time frame, which is a monthly, then our setup and trading setup time frame will be daily. So we always skip two time frame in between or one time frame in between from monthly to the we skip the weekly and then we goes to the daily. From weekly, we skip the daily and we go to the 4. So we go two time frame down, right? So these are the time frame we use for the TTF, and these are the time frame we use for the trade setup. That means that if you find an FSB red or FSB green or FSB blue in the daily time frame, our setup time frame and our entry time frame will be H1. Okay, what is the FSB? So FSB can actually happen three, four different type of the FSB. So for example, you can see in our this scanner is showing you FSB blue, FSB red, and FSB green. So FSB, I will explain FSB blue first, and then you will understand FSB red and green quite easily. So let's go back to the USD JPY 4 hour time. So these time frame from the FSB point of view, these are the TTF time. So we go to the New Zealand and JPY, and here we come to the New Zealand and JPY. Let me 1 minute, just a minute. All right, so let's do it again. Sorry, I need to run something. So we can actually get our indicators properly, right? So now you can see uh, we got an upper royal semaphore, then we got a lower yellow semaphore here, and then we got another blue semaphore. So what is actually telling you here is because first of all you have to understand that's the which one we open New Zealand Swiss franc 1 hour, right? So I was actually going to open this 4 hour time frame, which is 2 bars ago. So if I can see, yeah, so we opened the wrong one. Sorry. So this is the Euro New Zealand, right? Yeah, that's the right one. So now we can see we got an upper royal semaphore. Then behind this red, there is a blue semaphore. So you can see this move, and you see all those bungees are in the upper reversal zone. Then what's happened? That's the black bungee come down to the lower reversal zone, so as the prices come down to the lower reversal zone as well. After that, the black bungee goes to the upper reversal zone and turn down below the 80%, but the prices actually failed to break the previous high, and that is actually called the uh, failed snapback or FSB. FSB blue means that it's relative to the blue semaphore, and because behind this red semaphore there is a blue semaphore, that's why this indication is coming up here. In where was it? Euro CHF is still updating this one. So Euro New Zealand, I think it's moved somewhere here. So let's go back here. Euro New Zealand. We can sort any way we like. Euro New Zealand 4 hour time frame, right? So this is the one 4 hour Euro New Zealand 4 hour, yes. So you can see here this particular area is telling us 2 bars and 2 bars. Okay, so that's the one we are looking. The red color means that the FSB failed is actually in the downside, and the green means in the upside. So let's go back here, and this is what exactly happened 2 bars ago. We are telling us that the direction is actually changing. Now, the confirmation of the change of the direction is when we have a first break of the structure, which in this case, right up here, this is our break of the structure line. So we need to wait for the prices to break this area. Once the prices break this area, we go to the M15 time frame and look for every pullback, valid pullback, a trade opportunity for that one, right? So this is FSB blue and FSB red trend line, trend direction change time change. Now, what we do here for the bearish trend, we wait for the upper royal to be formed. So in this case, you can see that this is formed. And the second one we look for, we wait for the FSB red to be formed. So we're waiting for the FSB red is done. Right up here, the you already come below the 50%, 80%. So that's confirmed. The other thing what we are looking for, waiting for first bearish break of the structure. That's the part we are waiting. Once we done this one, then we shift to the Tudor time frame lower and take a short until every valid pullback. So this the third things is not happening just yet. So just for the sake of the argument and just for the sake of you to understand, I will go into the something which is a higher value one. So for example, Euro JPY, and you can see it's a bearish one, bullish one on the daily time frame. So you can see 87 bars ago it's happened. So this and this. So this is where it's actually happened. 87 bars ago. So this is your this is happens your FSP blue 87 bars ago, Euro JPY on the daily time frame. So we can see that you have a all the bungees are in the lower reversal zone. You got a lower yellow royal semaphore. Black bungee gone to the upper side. You got a blue semaphore. Then it's come down to the lower side, and you got a red bungee. You got a sorry, a blue semaphore here as well. And the price is actually failed to break the previous low. So that's we got our the first condition met. Now we look for the left and find out the first pullback, which is here. That's break of the structure. So we at this stage, right up here, we confirm that's the we are in up direction and we are going to catch our trend setup just around here in this area into the lower time frame, which is H1, and we will find out probably 4th of October how the market is actually changed. So let's go back to the 1 hour time frame and 4th of October. So we come down to the left. Okay, coming, and here it is. So every single pullback, we have a short trade entry. And let me show you where we got all those entries. So this is where we got this semaphore. So the first, the market is actually gone up. This is your first entry here. Your stop loss will be below somewhere, and you got your second entry, and you got your third entry, and then you got your semaphore is actually filled. So here you actually stop your taking any more trade right up here. Okay, and after that, you basically wait for another royal red, and you start taking the trades again from this area. Okay, as long as your daily time frames does not have any opposite direction of FSB on the lower time frame on every FSB in a direction of the TTF FSB, you can start taking the trade. So here you got the second one. So you got another trade, you got another trade here, you got another trade here, you got another trade here, you got another, and then right up here you got another FSB. So you end your taking your trade here. Okay, now we wait for the prices come down, and because there is no opposite direction of FSB, so until this area, so we basically don't take any trade on this area. But if you want to take the trade on this area, then H1 become your TTF, and you can go to the on M5 time frame to take all those trades, right? So here you got another area of the trade setup coming up. So in the direction of the TTF, you got the first trade, you got a second trade, you got third trade, you got a fourth trade, you got fifth, you got sixth, you got seventh, and you got eight. You can also get those ones ninth and continue until 10th, 11th, 12th until you got this FSP failed here, and then you exit out all those positions. So did you notice as how many trades you pick up in that many days just based on the your your entry, which was here somewhere, which was here. So royal, blue, and that's your first break of the structure, which was here. And then we got the first entry. And then from here onward, how many days you got? So you got from here to, I think you got, first you got about 19 days. And then you got another one coming from this area right up here. So which is another 14 days. So you actually got two lots of the trade. One from this area, second from this area. Did you notice that? So I have picked up that particular trade setup randomly from our scanner. So our scanner basically tell you the FSP blue, FSP red, and FSP green. FSP blue is a aggressive trend changing the direction. The FSP red is a little bit conservative, and FSP green is quite conservative. So the moderate is basically FSP red. So we mostly use FSP red. You can set up this setting in our scanner, and you can go right up here. You can see we already done here. So TTF time frame SEMA is the royal, and TTF FSP is our red. So red FSP, based on red FSP, we can actually pick up quite significantly all those trend setups, all those trend reversals, and try to enter into the market that way. Now, if you want to see that's the one you see that's very first one, of course you don't need this one because you need to wait for a break of the structure. So I normally pick up three or four, five numbers right up here. So for example, this is another one D40, 1 hour time frame, and that's actually gone up here. Uh, which one is it? Hang on, it's a blue, it's a red, isn't it? D40 1 hour time frame, it's a red, right? And it's got a red and green as well. Then the reason why is because it's a time needs to be changed. If market is closed, then you will get some kind of duplicated values. So you got this red semaphore. So you got a royal. All the bungees are in the lower reversal zone. The red bungees move to the upper reversal zone. You got upper red semaphore. Prices come down. The red bungees is actually significant. It didn't come down to the lower reversal zone, but just turn up from here. So that's also an indication that the market is extremely in the bullish direction and it's don't want to break this previous low. So you basically establish that your trend direction change here, and you got your break of the structures around this area. So that's the second one. This is where you will actually get your change of the direction, and then from 1 hour time frame you go to the 5 minutes time frame and start taking your trade, a long trade, to this area and to this area. Remember this one up here, this global semaphore, is on your lower time frame M5. You will see an FSB of the lower time frame STF FSB. So you need to be very careful about this one when you're using this. All right, guys, that's all I have. I just want to introduce my tools here, and that's give me a great look and save me a lot of time for me. So I don't actually have to monitor and watch all the time every single trade. That's pick up the trades for me. And once the trade is pick up, all I need to do, I need to focus on that particular time frame and that particular chart and try to work out whether it will be a good entry for me or not. Sometimes you will find that the market goes into the sideways. That's fine. There is nothing wrong with that one. As long as it's maintained your royal semaphore and it doesn't repaint, we are good to go to the upside. All right, that's all from me. If you like, then please subscribe the channel and also click the like button and share with your friends as well. Thanks very much for watching.